This episode of the Blockshots podcast is sponsored by Maple Block Capital. Maple Block Capital is a leading digital assets investment firm based out of Middle East and Asia. The firm has an impressive portfolio of over 100 blockchain projects. Maple Block Capital is a thesis-driven venture capital firm that focuses on all sectors of crypto and has a special interest in DeFi and infrastructure projects. You're listening to Blockshots, the latest media offering delivered to you by the CoinCodeCap team. So on our podcast today, we have Ivan Bjelajac. I hope I said that right this time, from MVP Workshop joining us. MVP Workshop, as generic as it sounds, is an incredibly strong team that has bagged some of the best projects that have come up in the blockchain ecosystem, including Celsius and Matic. So we have Ivan today going to help us talk about their investment philosophy, how they work, and what they do. So hi, Ivan. Welcome to the podcast. How are you doing today?
Hi, Akash. It's great to be here. I'm always doing well. I have too many things to build in this space, so there is little time for rest.
Right. So we've been chatting a little bit before we started recording, but I forgot to ask you where you're based out of right now. So where are you speaking from right now?
Actually, Belgrade, Serbia. Serbia is a pretty good hub when it comes to building Web3 projects. I think whole of the Balkans is actually a pretty good place to build a Web3 company from. I've also been building software from Belgrade for the last 20 something years, and we did a number of global projects. So we feel that this is the best place for us to be, both in terms of talent and the way of life that we want to lead. Serbia is also a neutral country. We are actually not a part of EU, although we applied for membership, so to speak. But as a neutral country, between West and East, I also don't need a visa for Russia or China, and I also don't need a visa for any European countries, and I already have a business visa for the US. So I think being here in Belgrade is a very, very Web3 thing to do. With being in this position where we are kind of in the middle of everything that's going on.
Yeah, that's super interesting. Something I definitely did not know before. So thanks for sharing that. Okay, so I'm gonna poke you a little bit about your background first. So can you talk a little bit about how you got into the Web 3.0 space in the first place, and especially on the incubation side of things?
Yes, of course. Well, I've been building software for 20 plus years now. First 10 as a system engineer, these other 10 as a tech executive in different companies with different sizes of companies. And in our previous, company that was called Devana Technologies, where we had a project called Managed WP, that we actually sold to GoDaddy in 2016. And we were looking for another, way to grow Devana as a company outside of Managed WP, because we felt we are very much tied to the WordPress ecosystem and the entire WordPress space. We wanted to see if the company might have other opportunities too, just in case that for whatever reason we need to leave, WordPress and try and start again from scratch. So it started off as kind of a safety measure for the company, building an R&D department. And then one of the projects in this R&D department, where our current CTO at MVP Workshop was actually the one leading the project, there was this idea of building a decentralized email system. And we had that idea maybe in 2014, 15. And then in 2015, after Ethereum ICO already happened and everything, we pretty much discovered Ethereum and said, let's try and build an email system on top of it. So that email was called the Lemon email. You can still find it online. We open sourced completely. But the project was a great learning experience, although it was not a great commercial experience. We basically launched an email on top of Ethereum in the early 2017. We did not have a token. We did not want to do an ICO. We just wanted to use Ethereum, and IPFS to send emails. And what happened was that we ended up um, very soon with the world's most expensive email service,
Yeah.
because we used gas to send emails, And in 2016, actually, Gavin Wood, he was still, I think, with the Ethereum Foundation back then. He sent us 20,000 ethers, sorry, to as a grant for this email. And so, there are these stories about the Bitcoin pizza guy, how he bought two pizzas for Bitcoins and everything. We are probably the guys who, spent 20,000 ethers sending emails back then. So about $6 million in email, if you look at it from today's perspective.
Yeah.
But yeah, obviously the project didn't work out as a good move, in financial terms, but it was probably the best move for myself privately, Malisha and my co-founders, because later, after, as I said, we sold the previous venture, to GoDaddy together with my friend Vladimir Prelovac, who actually started and led that company. We were left with this knowledge of working in the Web3 space and building, stuff on public fault tolerance systems such as blockchain, and we were pretty much blockchain agnostic, although we loved Ethereum as our starting point. So we decided to see how we can, where we can go from there, basically. And that summer, Celsius actually approached us. They asked us to help them with their technical paper and to see if we can work together on building the first version of Celsius. And that's how we started working actually together with them in late 2017. We've been working for Celsius for close to 5 years now. And they actually bought the part of the company developing their own product. Outside of that, I think also Lemon was our entry, into layer 2 solutions too, because that's how we started actually thinking about ways to scale Ethereum and other blockchains. And that is something that we in 2019 started working together with our friend Mihailo Bjelajac. He later actually joined the Matic team as a co-founder, and they rebranded to Polygon, which is, like his stealth startup that we helped kind of incubate and build a number of proof of concepts for. So right now we are also very involved with the Polygon team, and we are actually the ones building Polygon Edge, which is their own solution for you to spawn up your own Ethereum-like blockchain, and with your own plug-and-play consensus and networking. It's also EVM-based, like most of the things that we did.
Right.
And outside of that, yeah, we built around 50 different blockchain projects, either for us or for clients. And a number of these projects are still used, and of course Celsius and Polygon are multi-billion-dollar companies that we in some manner helped create.
So Ivan, did you once you got familiar with the whole Ethereum, I mean, I wouldn't say Web 3.0 because that wasn't a term back then, I believe. It was just Ethereum. So, did you get started with Ethereum and decided to, run a consultancy that then eventually turned into an incubation incubation builder venture builder, or was venture builder the original model that you guys started with right away?
I would say it was our desire to start off as a classical venture builder, but we had two problems. One problem was that we realized that we do not have enough capital to act as a VC and to bring in people from the outside to build stuff and then just provide them with investments and developers and everything. We were not really poor, we already had successful businesses in the past, but we felt that the space is too broad for us to do that. So we tried to create some sort of a hybrid. We have a department in the company that we are heavily investing in long term. That is a sort of an R&D department. It's called 3327. You can see what it does on 3327.io. And that department is building some sort of an internal Web3 technology radar. So I don't know if you know about this concept of a tech radar, but it's something that was, I think, created by a company called Thoughtworks. They basically said that you can divide the different types of technologies by type and also by maturity. So if you look at it from an external standpoint, you have technologies that should be tried out. You have those that should be closely assessed, those that should be adopted in your organizations, and those that you should just hold and profit from. So in this R&D department, we basically keep reinvesting all the time, and we are basically looking at pre-competitive technologies that are 1 to 5 years away from monetization.
Right, right.
And we don't know how far off they are, but we basically want to be, we always want to be that venture builder company that understands a technology before everyone else. So we are sort of trying to be in this position where our competitive advantage is not that we are a richer, more experienced venture builder in terms of, like business space and access to people. We are basically something like an R&D unit and a learning and training environment for people who want to get into these new technologies such as blockchain and Web3. And then we also offer them a framework how do we spin out a company together with them. I think we are kind of unique also that pretty much all of the ventures that came out of our venture builder started off founded by our own employees. It's not, we have a number of cases where together with clients we worked with, we worked for some sort of mix between cash and equity, so we do have some equity in some of our client projects, but the ventures that came out as like 0 to 1 from MVP were mostly actually founded by former employees, So I think that's kind of unique to what we are trying to do because we take you on as an employee, but by the end of the process, we also want to have you as a potential co-founder for one of the projects that we are seeing
Right.
in
So,
this space.
So, I mean, I understand that, you started with the venture builder model quite early in the space, way earlier than most funds, I'd say, were even aware that crypto was a thing. So, I'm assuming you have a very long term and a high conviction thesis on the space. So can you talk a little bit about within the space, once you have developed conviction that, blockchain technology is something that's going to take off, how do you spot, ideas that are worth, spending your time on, or helping the employees that are working on those particular ideas that, okay, these are the ones that we should align ourselves more with because this is the bet that can take off. And we have proof you have already delivered some solid companies out of your, out of your workshop. But then how do you sort of think about what framework do you apply to think about, what ideas will take off?
Yeah. So what we try to do is, we try to merge like the pool of employees with the pool of ideas. And those are two kind of separate pools in some cases, although employees do contribute to the idea pool. So what does that actually mean? Usually people that come to work for us, come as Web2 engineers or product managers or designers, and they start learning by doing either grants or client work or just working on some of our own projects as basically, like classical employees doing their daily tasks, and they're learning about Web3 as such. We have a small internal academy program that at some point we are probably going to make public, where we teach them more about Web3, but also at some point after they have been with us for about 6 months, we let them attend also like a business academy inside of the company. And after that, they can spend 20% of their time working on business ideas that we already put in the pool. They can add comments on these existing ideas. They can add a new idea, etc., etc. And we also populate that pool with something else too, and that is a list of the tech that we assess in our R&D unit. So usually when we are assessing a technology, we say, okay, these are the good sides of this technology, and these are also the use cases that we might see it be used for. And when we are talking about a use case, either in the R&D center or together with our employees, we are also saying, this is why it might be too early, or why this use case might not work. So the idea is, I'll try to put it like this. When we started working on Celsius in 2017, there were some parts of Celsius that looked more like how Avalanche actually looks today. But in 2017, working with Alex, Nuke, and all of these guys, we realized together that there is this centralized component which made, Celsius a CeFi pioneer that basically said, okay, both sides of the market are not yet ready. So we cannot build a thing like Avalanche in 2017. We need to have a centralized component that, is also a centralized entity that can work together with the institutional investors, but also can regulate, how Celsius does business. But then in 2019, 2020, you basically had Avalanche come out because now there was a market. So in a way, Celsius or us, everyone who was involved also had the tools and the knowledge and the idea to build Avalanche, even in 2017 when they had this other project. Avalanche used to be called Eatland, and they used to do it in a bit of a different way. But we felt that the market was just not ready for that. So what now we are trying to do is we try to say, okay, this is an idea, and it's already, and we know it's too early, but we are going to flag it somehow. We are going to say, okay, what we are missing to actually have a mature market, and that's probably the number of users, in DeFi, or the number of users using Polygon as their main chain for transactions, and we add these attributes
I'm sorry,
as metadata.
I need to just clarify one thing. So did you say Avalanche, the blockchain, or do you mean like Aave, which was Eatland,
I moved to Aave for some reason. I was thinking of Avalanche because actually we just 2 days ago we launched one of our projects, Tesseract, on Avalanche. We built it as a friendly fork of Yearn on Polygon, and we just launched Avalanche, and that was in my thoughts all the time. I meant Aave.
No problem. I think I got a bit confused and thought might be good.
No, you're right. It's better. It's good that you mentioned it because I would keep speaking about Avalanche instead of Aave, but so everyone else would get confused. We basically had this idea about building Aave before Aave, and what I was trying to say here is that pretty much at some point, 2-3 years later, the market conditions changed. and it was possible for us to launch a new project that would actually work like Aave.
Mm-hmm.
And we didn't do it because we were, working very hard on Celsius and all of these other principles. And now we have Aave as an amazing competitor to what Celsius is doing. But in a way, we could have had a chance to be behind both companies, or
Right.
behind another company such as Aave, or that could be an extension of Celsius if Celsius wanted it to. But the reason why we didn't realize that at the time and why we didn't do it was that we had the knowledge inside of the company, but we didn't have a proper way to manage that knowledge, like 3 years ago. And so what we are doing now is we are basically adding metadata to these ideas. As I said, that there are certain market conditions that need to be met in
Mm-hmm.
order for idea to make sense, and then we basically try to monitor that. And every couple of months, we do a reassessment of all of the ideas in our pool, and we say, okay, this is an idea we had 2 years ago, this is the research behind it, and it seems that the market conditions are now met.
Right.
We are going to create a team to work on it from inside the company. We are going to create a new SPV company, behind that team, and we are going to give the team equity, etc., etc. And we are going to, at that point, invest into this idea.
Right. So, Ivan, let me ask you this, right? Like back in 2017, when you guys were working on things like Matic or, I mean, Polygon or Celsius
Yeah,
or something like that. Mm-hmm.
Matic and Polygon came later. Yeah,
Mm-hmm.
but yeah, in 2017 for us it was Polygon, it was sorry, Celsius, and it was a couple of other smaller clients.
Right, right. So,
Yeah,
so back when you guys were doing that, the overall crypto market condition was very different from what it is now, right? So, in conditions like we have today, when things are so frothy, companies are raising money every week, like tens and 20 companies are raising money every week. New and new consumer apps are being developed based on hype alone. Companies are reaching like billions of dollars in valuation, no real use case, no utility. How do you guys navigate such markets in terms of, where true alpha is, or in your case, where there are opportunities to which you can apply your resources and build things out? Because I'm assuming, like in your case, unlike a venture builder, you're not just deploying capital, you're also deploying human resource, right? And time.
yeah.
So how do you sort of navigate markets like these when everything is like so hyped up, so pumped up? How do you separate noise from like things that actually make sense?
We use that tech radar that I mentioned for that. I think the main idea for us in that regard is what knowledge do we actually want to gain, nurture, and keep, and not just if we can get good money from using the tech for the next 1 or 2 years.
Mm-hmm.
I'll give you an example. We believe that EVM became the de facto standard. We do believe a lot in a lot of things that Ethereum and Polygon with Ethereum are doing, but we also like what is happening in like the Polkadot ecosystem, etc., etc. We are still assessing how deep do we want to go into some other techs like Cardano, etc., because we feel that Haskell is maybe not yet the tech that we want to have a big team dedicated to, and it's very hard to teach people functional programming in Haskell, etc. So we are still assessing that as an opportunity, and we have a couple of people in the company working in ADA Cardano, like working on Haskell, learning how to best utilize what ADA is trying to do, but we do not feel like we are fully committed there.
Mm-hmm.
The reasoning behind this kind of approach, is that we are basically focused on optimized innovation, and it takes quite a long time for us to move technology into this whole part of the tech radar and say we just need to scale the teams, working on this. So today, if you tell me, right now, today, I think if you gave me 50 Solidity developers and 50 people, working with Haskell or in Cardano ecosystem, I could just hire all of them and have a lot of work for everyone to do. But I would still probably hesitate to hire the Haskell guys because I'm not sure if within 2 years or something I might need to fire them or to move them to other projects.
Yeah.
And this is, the way that we, as I said, try to optimize over time. When it comes to the North Star, I think that the North Star for MVP workshop and the tech that we are basically building is pretty much the same. We feel that the future of the internet has to be a fault-tolerant system that also is completely public and decentralized, and that because of that, we will definitely have some sort of a cryptocurrency or multiple cryptocurrencies as a part of that ecosystem. Because without, crypto, these systems cannot be truly decentralized and public. And on the other hand, we also believe that this means that you will have a payment system, that can also issue different financial primitives as a part of this core technology. And we want to create an organization that holds maximum of possible knowledge about building these type of systems. How
Right.
exactly will we monetize that knowledge over time? How are we going to figure out the ways, to work as a venture builder company in order to, how would I say, or to outperform classical VC approach, or to, even outperform the crypto market itself, is another thing. But yeah, I would say that that is like the essence of everything we are doing.
Makes sense. So, like on that note, I was wondering if you could talk about, some areas of interest, special interest to you and MVP Workshop right now. So, I mean, there's a lot of talk around many new concepts, a lot of which have been coined and created just this year, and now companies are sort of building in those directions, metaverse, DAOs, a bunch of things, DeFi 2.0. So, what are some of those niches that have emerged recently that you guys are interested in, or maybe already started working on internally, or are planning to start working on?
Well, I think the main point of interest right now for us, in terms of adding more and more new people and new tech to the company, is around zero knowledge proofs
Right.
in general. Yeah, we about a year ago we started hiring more and more mathematicians, not just developers, and we had a couple of use cases where we have been involved. We feel that this layer one, layer two thing that is happening right now and different approaches to it are the crucial part of having blockchain as an integral part of several industries. For some of them, it's already there, like for everything that's involving creator economy and fintech. But there is also this huge shift that I would expect to happen in the next couple of years, when we will have more and more supply chains and more, be the digital or real life supply chains. We are probably going to see them more automated, which when it happens will require basically a transaction layer of some sort also. And I think blockchain is the best route to go there. I'm not a big believer in private blockchains or like consortium networks. In a way, I think that they do not have a long-term future. I think it's going to have to be tied to public fault-tolerant systems on the internet, and we can discuss that also in terms of why do I believe that. But considering that I see that as a future, that is going to happen in the next 5 to 10 years. I think if we are dealing with pre-competitive tech right now, being a part of zero knowledge proofs right now is very important because they are the primary enabler outside of blockchain for us to actually have like fully digital supply chains of any sort.
Right. I think a way to think about it, and correct me if I'm wrong here, is that while blockchain does the BFT thing, allows you to, generate consensus in a decentralized manner and do, validate transactions and such. ZK tech is what is like most people are betting on in terms of scaling the speed of what blockchain does, right? So that's the core value proposition of ZK proofs, right?
Well, if you look at it, from these two perspectives, I think that there is first the thing that distributed, databases, distributed transactional databases are like 60 years old or something.
Mm-hmm.
It's not that we didn't have them before, it's not that we did not have, people putting information in the ledgers and using computers and databases for that.
Mm-hmm.
It's actually very old technology. Also, if you look at it, like you have works about putting, this data into cryptographic blocks and moving them around. And it was actually even called blockchain. I'll send you the link later if you don't have it. But like in the early 90s. So if you look at it from that way, all of the tech behind stuff like Hyperledger Fabric, etc., with their ordering mechanisms, etc., exists, for like 30 to 60 years.
Mm-hmm.
The thing that is new and that started like 12, 13 years ago with Bitcoin is actually this idea that we can move these type of systems to the open network and to the public internet. And I don't think that you can have any substitute for that approach doing these things over public internet. But the problem is with that approach is also the reason why these technologies were replaced in the past, and that is that having a transactional distributed database is probably the most expensive way for you to have a database anyway, in terms of resources, not just for proof of work, but also, in anything in terms of storage, in terms of time, to get to some information, etc., etc. So this is how we started, thinking about it, when we also got into layer twos, that you want um, to have a separate verification and execution layer in certain ways. And there are different ways you can basically achieve that and still have a safe system, which is also protecting other people's data. And I think, whatever approach you try to do for that, zero knowledge proofs are an extremely big part of it.
Right. So can you explain like on a very basic level as to where ZK proofs fit into what you just described?
Well, if you want to have companies share data on the public network, you do not want them to be forced to share the content of that data. So you basically need applied mathematics and cryptography to secure the data being shared. And if you remove the data itself, from this main layer where everyone is transacting, you also have to have tools to verify that the data, being placed in other areas and places is actually correct. So if you want to have these permissionless systems that can allow companies to opt in or opt out and to work together on certain areas uh, without sharing their own data in a way that might affect their business, I think, ZK or all of these theories about and applications, not just theories about having ways to prove something with statistical truth instead of just putting it out there publicly for everyone to verify are probably the only way to um, have people collaborate without jeopardizing their business model as such.
Mhm. Right. So bringing the conversation back a little bit to, MVP workshop, venture building, and in general, building in crypto. And I would say, this is probably like my last question to you for the episode today is that can you explain how things have changed in terms of, accessibility to new entrants into the building side of things from back when you guys started to now? Has it become easier? Because personally, what I find when entering the crypto ecosystem is, there's just too much information, too many blockchains, too many technologies to just know about, even on the most basic level, to have any understanding of what I'm doing. So, and do you have a perspective on the changes in that?
Well, look, it's definitely a lot better than what it used to be. I
Mm-hmm.
remember that in 2015, when we first, wanted to buy Ethereum in order to work with our email that I mentioned, we actually
Right.
had to uh, go into some video game which was like an RPG, and then buy subscriptions to it, and then we had to sell those subscriptions to someone for Ether, and then we could use that Ether to build a product, etc., etc. So the in 2015, it was not as easy, to get Ether and to transact like with a classical exchange such as today, etc. And it was less exchanges, and it was harder in regulatory terms and everything for us to send, to send actually money from the company to get something like that here in Serbia. And it was similar when onboarding people. I remember in 2015 when we were looking for people to come and build in Ethereum ecosystem, we had to actually, uh, commit a lot of time to convince some developers to start, learning about blockchain, etc. Just because it was a very new tech, and it was very unclear to them is the tech itself going to last, and is decentralization actually a good enough incentive for the tech to become valuable and for them to learn it this early on. And now that obviously changed. I don't think anyone is questioning anything like that anymore. We do not have problems accessing funds, crypto salaries and Web3, people are they're getting paid well, so there is more of a situation. How do you move people from Web 2 to Web 3? Then it's about why do they want to move in the first place, which was the main topic like 5, 6, 7 years ago.
Mm-hmm.
And today, when everyone wants to move, the big problem is, as you said, uh, crypto is still pretty young, and we are still figuring out a lot of problems about how do we actually scale the tech, how do you apply it to different use cases. So because we are still in this R&D, hacking, and building mode in crypto, there is very little standardization. And I think that's probably going to be the case for the next 5 or 10 years. There are some de facto standards that are here. Like as I said, I personally consider Ethereum virtual machine to be the de facto standard, for a lot of things, which is also one of the reasons Ethereum is probably going to be one of the biggest ecosystems, if not the biggest one, for the long term.
Mm-hmm.
But outside of the EVM and a couple of other things, I think there are still too many moving parts. If you want to become a part of Web3 right now, you have to understand that everything you are learning today is probably going to change tomorrow, and that this will probably come with certain benefits that come from entering, technologies in their early stages. It is painful for the first couple of years, but after that, you are one of the pioneers of something great, and that has this, tendency to give you a lot of advantages and even financial rewards, but they're usually a bit delayed.
Yeah. No, that makes complete sense. I think even though it's been some time, 2017 to now, I think still it's pretty early in general, and onboarding is still pretty difficult, even though, yes, buying Ethereum has become much more simpler and easy. But outside that, yeah, crypto is still pretty wild. So yeah, thanks, Ivan, for joining us today on the podcast and sharing your thoughts on a number of things, including what you do and the things you guys have accomplished so far. Great chat, and got to learn a lot from you.
Thank you for having me, and anytime when you need to speak about something, or if you need some help when it comes to venture building, let me know, and we'll figure it out.
Yeah, that's actually very helpful in case you want to tell people how they can reach you in case they have some idea that they would like to execute on but don't have a clue and feel like a venture builder might help. So how can they reach out to you?
Yeah, well, we can probably put some link to my email or to our website in the details,
No, you can
after the
just
call.
describe it verbally,
Uh-huh.
here. And
Okay, yeah. Well, look, we do not have any official process in terms like having cohorts when we accept new startups. You can just come to mvpworkshop.co or .com, whichever, it leads to the same website. And just fill out the form and let us know about a bit more about your idea. We'll probably, we'll get back to you with a couple of additional questions, set up some sort of a call where we will probably try to tell you that there are a couple of problems with the idea that we see, and if you survive that and still want to work with us after we insulted your thought process or whatever, then we will probably arrange some sort of next steps to see how do we best, help you out, or at least point you in the right directions in terms of resources or other similar projects, etc., etc.
awesome,
We
yeah.
have a tendency, to do at least a couple of these calls per week. So, in general, we are probably going to give feedback about any well thought out idea that we receive over email. And, we love connecting and being around people as much as possible. The other way to do it is actually guys from our Trapezis team are currently at ETH Denver. So if you are at ETH Denver for whatever reason, just find Lazar and Vuxan from Trapezis. They are the guys actually building Polygon Edge. And, say hi to them, and they'll tell you a bit more about their experience at the contest.
Awesome. Yeah, I think that's super helpful for anyone wanting to get to this. I don't think that people will be able to, see this by the time ETH Denver is still running. I think it ends in 2-3 days,
yeah.
right? But yeah, regardless, you can contact even through their email and their website, and that should be enough, right? So yeah, thanks again for joining me today on the podcast, and thank you for sharing your thoughts.
Thank you again, Akash, and bye until next time.
Yeah.